America just spent money supporting Japan's currency. And the evidence wasn't a press release. It was a handwritten note. On July 31st, a photographer captured a Treasury secretary's to-do list. One line said, "Buy yen, $5 to $10 billion, and that matters because America hadn't directly intervened in the currency market since 1998. So why did the United States suddenly decide to save the Japanese yen? Japan's economy has a massive problem. Its debt is enormous, and the cost of servicing that debt jumped nearly 11% to 13 trillion yen. But at the same time, the yen was collapsing, and Japan couldn't simply raise interest rates to fix it, because Japan had spent decades building a financial trap, and now, escaping it could hurt America too. For years, Japan kept interest rates near zero. To make that possible, the Bank of Japan bought enormous amounts of government bonds. Today, it owns roughly half of Japan's government bond market. So if Japan raises rates, it has to start paying more interest, while still holding trillions in low-yielding bonds. Japan can defend the yen, or protect its finances. It can't easily do both. So Japan started defending its currency with something it already had: American government bonds. In 1 month, Japan spent roughly $74 billion defending the yen, and its U.S. Treasury holdings fell by about $66.7 billion in May. That was the largest 1-month drop in Treasury holdings ever recorded for a country. And here's where Japan's problem suddenly becomes America's problem. Because when Japan sells billions of dollars of American bonds, it can push their prices down, and America's borrowing costs up. America's long-term borrowing costs were already at their highest levels since 2007, and Japan is America's largest foreign holder of government debt. So Washington had a problem. Japan needed dollars to save the yen, but America didn't want Japan dumping treasuries onto the market to get them. So instead, America had another option. The Federal Reserve has something called the FIMA repo facility. Think of it as a pawn shop for governments. Japan can hand the Fed its American bonds, receive dollars, and later buy those bonds back. That gives Japan liquidity without forcing it to sell treasuries into the open market. But here's the strange part. The facility had a $60 billion per country ceiling, and its balance was sitting at zero. Yet just 48 hours after the currency operation, Treasury Secretary Scott Bessent publicly encouraged the Fed to expand it. Nobody had used the room. But America suddenly wanted more room. So was America helping Japan because they're friends, maybe. But there's another possibility. Japan is America's biggest foreign creditor, and if Japan is forced to sell American debt to defend its currency, that can make America's own borrowing problem worse. So the real story may not be America saving Japan. It may be America protecting itself. And the strangest evidence? A handwritten note that was never supposed to become the story.